Hello everyone and welcome to my channel. My name is Sunday and this is Against FX. Today I'm going to be treating a topic that is very important when it comes to forex trading. For you to be a forex trader, you must know how to manage risk. When we talk about risk management, we are simply saying the way you can protect your capital. Because in any business you venture into, if you cannot protect your capital, that means that business will soon collapse. Once you are out of capital, any business at all will just close. If you don't have capital, that business will close. So that is why we are treating this topic, and I want you guys to sit down, open your mind, even though you must have learned so much about risk management. Let me explain it to you. Let me teach you the way you will understand it so that it will stick. You will never forget it. So at this point, I'm going to pause for a moment. If you have not subscribed to my YouTube channel, Against FX, please do subscribe to it, all right? So that anytime I release this kind of valuable video, you'll be the first to be notified. Once you subscribe, you just activate, there's a bell sign that you need to activate so that once I upload a video, you get the prompt immediately. All right, and apart from that, do like my videos, share it, reach out to other people, share it with other people. Who knows, you might just change somebody's life. All right, there are so many materials out there, but we still have quality materials from the so many materials that are available. And apart from that, there are people that will teach you who will not be able to understand. That is why we are saying, come to us. We are going to show you. We won't hide and we won't hold back anything. All right. So that being said, risk management. All right. Risk management. And before I go further, don't forget to always, for the fundamental analysis, always use Forest Factory. You see all the news, the time, and their impact. All right. So don't forget. And apart from that, you go to my website against www.againstfx.com. All right. All you need to do is just send us a message, contact us, tell us you want us to mentor you. Now, a yearly mentorship, you see, once you pay this $200, meaning that in 12 months, we are going to be teaching you everything you need to know. It takes time for you to learn a particular skill. It takes time. Don't just jump into a skill and say, okay, it's under 1 month, I want to. No, it takes time. So yearly mentorship is 12 months. It's just $200 only. Then the lifetime mentorship, if you are able to pay $500, that means you'll be trading with us. Anything, any trade that we take every day, apart from teaching you, you send it to you, you just be replicating it. All right? And you always have one-on-one session with the coach. one-on-one session. We will teach you so many things that are listed here. Advanced way of how to approach, how to be a profitable and a very smart trader. All right, a forex trader. So it's just $500. So please sign up. It's very, very important. All right. So at this point, I would like us to take it up from here. The topic I titled risk management, like I said. Now, when you say risk management, there are so many definitions all here and there, textbook definitions here, but I would give you a very understanding of this so that when they say risk management, you just be cracking your risk management. They will be giving you different definition that will just be confusing you. Risk management simply means the rules you put in place to safeguard your capital. That is just it. The rules you put in place to safeguard your capital. At any point in time that you want to take a trade, the first thing that will come to your mind is how do I protect my capital? Because once you click that button buy, you are exposed to risk. Because you either make loss, two things will happen. Once you click the button buy or sell, at that point, you don't have control over it anymore once you click sell or buy. So one thing should come to your mind at every point in time when you want to take a trade. My capital is at risk at this moment once I click buy or sell. Let that come to your mind, to your consciousness. Then that will enable you to do your analysis right, your technical analysis. And once you are able to do your technical analysis right, once you get it right, all right, you will see that the fundamentals always align with the technical analysis. All right. So the first thing that should come to your mind is I have to do my technical analysis, get it right, because my capital is at risk. Once you have that consciousness, then what you need to do next is once you are planning for a trade, because it's your analysis that will give you the clue to your entry point. Once you perform your technical analysis, from there you will now say, okay, I will enter as soon as price get to this point or get to so point. I'm going to go long or go bearish. In other words, I'm going to buy as soon as it get to a certain level, price level, or I'm going to go short or sell as soon as it gets to so price level. Yes, at that point you have done your analysis, then your entry point will now determine where you enter, will now determine the lot size you are going to um, apply at that moment, because your entry point is what will now determine where you put your stop loss. Let's say, for example, I bring out my sell tool. I say, okay, I've done my analysis. I say, okay, this is an uptrend, but there was a kind of retracement, but the price is rising again. All right, okay. I'll now say, okay, at this point, I want to buy. For example, I say, okay, this point here is my entry point, 1.54 or 1.35450. I will say this point is my entry point. All right. Then some people will put what? there are stop loss here. You have been able to map out your entry point. Then you now say, okay, my stop loss, I want to put my stop loss here below this point here. I'm just giving you an example. I'm not saying you should do what I'm doing right now. You say, okay, I want to put my stop loss order here. All right. This point, entry. The EP is your entry point. For example, I'm just giving you for teaching sake, then stop loss, your Excel. You say, okay, I want to put my SL, my stop loss here. I want to enter from here, put my stop loss here. Now, from here to this point, what is the stop loss gap here from the point of entry to this downside? Because you are going long. What is your stop loss gap here? It's 72.5 pips. 72.5 pips, guys. This is your stop loss gap. Based on that 72.5 pips, all right, this is for training purpose. Based on that 72.5 pips, that is now when you will now say, okay, my stop loss is 72.5. Then, which loss size should I now use based on my capital? Do you understand what I'm saying right now? Because this is where you have done your analysis and your entry point is here at 1.35468, at this point, sorry, at 1.35450, and your stop loss, you want to put your stop loss at 1.34752. Or if you say you want to put your stop loss below this structure, do you know how many? 159.5. Why? Because where you entered, your entry point, down to where you want to put your stop loss order, that is what will now determine your lot size and the amount you are willing to risk. And brothers and sisters, don't ever risk more than 1% of your capital for just one trade. I know some people just want to flip. It depends on the amount, depends on your account size. But if you are a professional, you cannot, or rather, it's not advisable for you to risk 1 to 2% at every given trade. Don't risk like that, because in forex trading there are thousands and thousands and thousands of opportunity on a daily basis. All right, you might not have an opportunity to trade today. That does not mean that, because of your strategy, that does not mean that tomorrow your setup would not line up for you to take a trade. Or even if you take 1 week, the next there is another week will come where you will take a trade. The good part is you take a quality trade and make good profit, even if it's once in a week on a higher time frame. Well, I'm not trying to let people come and be trading on a higher time frame, but if you want to have peace of mind in trading, scale up to higher time frame. All right, scale out to higher time frame. You might not take too many trades every day, but once your setup line up, that trade is going to yield you a good profit. And you will not be seeing all those bars, but you just be jumping here and no. You will see once you're able to perfect your analysis and your entry point, where you put your stop loss and your exit point, you just see price will just be pushing gradually to that place and nothing will stop it. All right. All those resistance support that you see on a lower time frame, when you scale up to the higher time frame, you discover that that place there is no resistance there, there's no support there. So when it's pushing, once the higher time frame times, once it's time to push, once it's pushing, nothing stops it except the resistance and support on the higher time frame. So what am I trying to say? Risk management is a very crucial thing in trading. All you need to do is at every point in time, always try to protect your capital so that you will not run out of business. All right? So before you take any trade, make sure you do your analysis well. After you must have done your analysis, you have already mapped out your entry point, you know where to put your stop loss order, and you know where to exit. All those things is what you plan after your analysis. Then you now wait for price to come to that level. And once price get to that level and you see that confirmation of what you are looking for based on your strategy, don't hesitate to get in. All right. And before you do that, you must be sure, okay? Make sure there's confirmation. Don't just assume. Because if you're assuming, that means it's as good as you just threw your money away. There should be a confirmation. If it is a buy, there should be something that will tell you, okay, now we are buying. If you are to sell, there should be a confirmation that will say, okay, once this neckline is broken, as far as all my checklists are met, all my rules are met, I am going fully in. Then, another thing you should always put in mind is that don't risk too much because if you do, you are you will be exposing yourself to so much risk. You don't want to go out of business. So let me just say one thing. If you are supposed to take one trade, then you put two lot size and you miss out and the trade goes against you. All right, you just take 2% out of your total capital. 2% wipe off. But let's say, for example, you use 0.5. If you use 0.5, that means before you can get up to 2%, before you can lose up to 2%, that means you have to take like 4 trades. If you take one, you miss it, you do your back test. After doing your back test, so you that is if you now use 0.5, for example, I'm just giving you an example. Instead of using 1%, if you now cut that 1% into two, that means you are going to take 2 trades. If you take one and it goes against you, you make loss, for example. Then you go and do your back test and know why. Look at that trade and know why you make that mistake, why the trade went against you. Now, from there, you will learn something. All right. So then you take another one again, you get it right. So that is how you can be managing your risk very well. And also, you know your lot size to always apply. All right, from the entry point to your stop loss, that is what will determine your loss size. So thank you so much. Share and God bless you.